I'm Corbett Wall with DV Auction, here with the cattle market summary for the week ending June the 24th. Well, we're finally seeing the results of this positive basis that the industry's been working with for the last couple of months. The board really wasn't down all that much. By the time we ended the week, it was up and down, very volatile like it usually is, but at the end of the week it hadn't done a whole lot. But our cash markets are really being more volatile than the futures as of late because we don't have any floor under this thing. But your fat cattle traded mostly on Wednesday there at 116, which was $3 to $6 lower. Now we did see some trade there at the end of the week, not a whole lot, but one big deal anyway for 118 for out front for several weeks out front. Well, that's a positive note. This is the first time we've sold some cattle higher out front like that. So maybe we are finding the bottom of this thing now that we've finally got this huge basis under control. We've got to the end of June. It's the board and cash have come close enough together that it's going to work and flush out. Now we can roll on to the next. And that's really what we need, and we're not going to be working with quite as big of a basis as we have been, so it should be better. Your dress trade ran a big range really from 185 to 190, with that 185 more prevalent early in the trading period and 190 more prevalent late. So we had a few small reasons to maybe be optimistic there towards the end of the week. But your cattle futures, live cattle, down hard on Monday, back up a little bit on Tuesday, didn't do anything Wednesday, up pretty good on Thursday, and then tanked Friday, of course, just like all your publicly traded markets did with the results of Great Britain leaving the European Union. But end of the week, your live cattle for August at 110.87, which was down 168 for the week. Your feeder cattle were down on Monday, but not nearly as hard as your fat cattle. Tuesday up big because of the big sell-off on the corn market. Wednesday up pretty good. Thursday up pretty good. And then Friday the big sell-off due to the Brexit deal. But ended the week with the August feeder cattle at 139.45, up $2.03. Corn, don't normally give the corn breakdown, but corn was down every day of the week hard. And ended, we've gotten some rains back up here in the Corn Belt. We've had some hot temperatures up there, but they need that for pollination and things like that. But ending the week with new crop corn, the December contract at 448 3/4. Or excuse me, ending the week at 394 1/4. It was 448 3/4 at the end of the previous week, but anyway, down 54.5 cents a bushel on your new crop December corn. That is a huge sell-off. But your box beef cutout values were down, but not as much as what a lot of them thought they would be. They thought they'd be down way over $10, and this box beef deal is holding together pretty good. We've got pretty good consumer demand. Your choice average sales for the week at 216.82, down 871, which is pretty hard, but not horrible. Now we're seeing the select and the select choice spread there tighten up quite a bit, with select carcasses averaging through the week 198.42, which was down $4.12. But Friday was a big active day there, and a lot of things happening with the whole trading industry, your stock exchange, all your futures markets, everything just really turned on their ear because of the UK leaving the European Union and unsure about trade and all these things, and it made our the dollar stronger. Of course, your British pound went down further than it has since the early 80s, but it strengthened the dollar, which that's a good sign for the United States, but it's hard on trade for our export products, and it's hard on ag products especially. But we had a lot of reports come out on Friday. Had cattle on feed. I had a cold storage among those. Your cold storage come in with red meat down 2% from last month, 5% from last year. Beef in that down 1% from last month, down 6% from last year, and that's important because that's the inventory that's on hand, the stockpiles of beef that are in freezers. And when there's less of that around, then that means that we're hoping that we'll continue to have decent demand for the beef that we're producing right now. But you look at your cattle on feed report that come out on Friday there, and no surprise at all there. The analysts absolutely nailed it, which is a little bit odd because there were some big spreads in there, especially on the May placements, but they absolutely nailed it. You look at your on-feed inventory as of June 1st in the feedlots. It was 102, which was 2% more than the same time a year ago, and that was exactly what everybody thought it would be. Your placements through May were huge. Well, not huge, but they made a big difference compared to what they were last year, because they were kind of light last year, but 110% of last year, and that's exactly what the analysts had predicted, or the average of the analysts. And then marketings during May, we're at 105, and that was also predicted too, because they had one more slaughter day there on this year than we had a year ago, so that helped that be larger, so it's not that big of a positive, but shouldn't be any effect on that. There's enough things affecting the market right now. We don't need cattle on feed coming in there and changing it unless it was going to do it by positive, and it's sure not going to do that. But we're not going to see any big change in the market because of the cattle on feed. The biggest thing that I noticed on there is your May placements. You would think about cattle being placed during the month of May. It was a lot of those big heavy graze out wheat cattle. And we had a lot of those this year. Didn't have a whole lot of them last year. But you look at your number of cattle placed weighing over 800 pounds. It was up 20% compared to the same report last year. That is very, very significant. And then the lightweight cattle was down quite a bit too compared to last year. So we're placing those bigger, heavier cattle. Those cattle are going to hit, give us 130 or 40 days down the line there, and I think we're going to still see that big crash more so than what we've already been through. When we get late in the summer, it's still going to be awfully hot. When we get into September and we've got a lot of market-ready cattle going to be throughout the dog days of summer, and it looks like we're going to have a lot going into the fall, and then a heavier supply of calves, and it's not going to be too good. Look at your feeder cattle market. It was down big. It showed a few signs of maybe coming back there at the end of the week, but not really anything significant. For the week, your cash feeder cattle markets were down $2 to $6, and that was also seen in the direct trade, which we haven't seen a lot of direct trade yet. And that's a little bit scary in that like a lot of these yearlings that are going to be coming off these major grazing areas, especially the double stock areas that are going to be coming off in the middle of July here, a lot of those cattle still belong to the guys that turned them out. Usually by now most all of those cattle have already sold and traded, and we kind of know where we're at, but we don't know where we're at yet. And the market's been going down so hard, those guys are going to be hard to trade with. And your feedlot guys are used to losing money all the time. They use a whole lot of different scenarios to manage their risk, and a lot of times your guys that feed a lot of cattle will say, no, feeding cattle is not a good investment, but I can manage my risk to where a lot of times I have a chance to make some money, and it's on that risk management rather than the real investment that they have. But your cattle grazers, yeah, a lot of them will buy some puts or something like that, but they don't have those big scenarios of where they manage a lot of that risk. A lot of the guys, they try to buy some calves or some stocker cattle as cheap as they can. They want to turn them out and put as much weight as they can on them as quick as they can and sell them as high as they can, and they're not into calling their broker or their trading company all the time and managing that risk. They're not used to losing money all the time. They're going to be hard to trade with. There's going to be a lot of those cattle be put on the videos that come up here in the early part of July. Usually by the time those videos come, which we always see a big string of them for the first half of July with Superior and Western and Northern Video. A lot of them are going to be having some big runs on there. We don't usually see a whole lot of grazing cattle coming off current delivery there, but we might see some this time because a lot of those are still in the hands. But a lot of those cattle are going to be PO'd on there too. They're got these guys that have grazed those cattle have got dollar signs in their eyes, and they think they're going to get a big return, and they hate to lose money, and then a lot of those cattle are barely going to bring back first cost if they do that, and so they're not going to take that very good. These guys that have these big string of ranch calves, especially up in the mountain states there, they're been kind of spoiled the last several years. They're used to getting a big price for those calves, and they're not going to get that this time. They probably won't lose money just holding their cows and taking care of things through that, but they're not going to be out shopping for new dually pickups or anything like that. They might just barely get their costs covered. But so a lot of those guys will probably end up POing those cattle on those first videos. Now those videos will work with you pretty good in that if you eventually sell your cattle on there and they get the commission, there's not really much of a penalty for POing those cattle. But it may look to some analysts as if we've got a whole lot of cattle because they keep seeing those same cattle on those auctions, but it's really just the same cattle, but they'll just keep putting them up for the next sale, and the market's probably going to get harder and harder, and they're probably going to take less when they finally do sell them than what they were offered in the first sale. So that goes for you guys. You might want to go ahead and take what you can get because this thing's not looking like it's going to get a whole lot stronger. We may have a hard time keeping these fat cattle much over $1, and if we get down into that level, your feeder cattle are really going to tank harder than what they already have. But you look at some cattle auctions there, El Reno, Oklahoma on Wednesday, that 8,400 head, they're called their feeder cattle, $2 to $3 lower. Not a good test on the calves, but we're not seeing a whole lot of cattle moving right now because it's so hot. It's hotter than what it normally is this time of year. It's really took its toll on the market to having dog days of summer in the middle of June, but maybe we've took the brunt of this loss that we were going to see this summer, and we've got some things to hope for. The fat cattle market is showing some signs of maybe getting close to some soft footing anyway, if not some sturdy stabilization there, but we've still got a long way to go on these feeder cattle because it doesn't look like this fat cattle deal is going to snap right back anytime soon. But working here with DV Auction on the road, so we'll talk to you next week.